Hi there, my beautiful boys and girls. It's me again. We are going to do trading stock deficit and rent income adjustment as per request. Right, I've extracted this from May-June 2025 paper. Let's start with trading stock. We're not given anything. Okay, let's go to the information. Stock take on 28 February 2025 reflect a trading stock deficit of 22,150. This is an expense, and you see it's recorded here on our balances that appeared in our books. Right. Now, this deficit was calculated without considering the following. Okay, this is the adjustment we have to work on now. It means that we have to consider what has not been considered. Merchandise of 31,200 returned by M. Frede, a debtor, on 28 February was not recorded. Okay, the goods returned were placed back in stock. Okay, what is trading stock deficit? Trading stock deficit is when the stock take, according to the physical count. Stock take is to count the stock physically. You go and count the stock. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I have 10 of loaves of bread. 1, 2, 3, 4, 5. That is stock take. So the stock take is telling us we have this amount of merchandise, of stock, and the books are telling us something different. And what the books is telling us is more than what we have physically counted. Right. We will come back to this one that says Ebony Ltd maintain a consistent markup of 60% on goods. We will come back to this one. Right. I want us to understand this. We have our books where we record stock to say, okay, we have bought stock plus 100. We bought another stock plus 200. We sold stock with the value of 150. We have sold 150, meaning that we are left with 150. We go and buy again. We buy stock for the value of 70 rand. Now we have how much? We have 220. We go and sell stock to the value of 80 rands. Now we have how much left? 140. Now this is the end of the year. Right. This is according to the books every time. When we buy and sell, we buy and sell. Now we say, let's go and count. Let's go to our storeroom and count how many items are there physically. We go and count. When we go and count, we find that our stock take tells us that we have 95 in stock. But the books are saying 140. So it means that it's less. By how much? 140 minus 95. 45. We have lost 45. Is either it has been stolen, it has been damaged, whatever the case might be, we don't know. So this 45 we call it trading stock deficit. And it's an expense to us because we have spent money to buy that stock and hoping that we're going to sell the stock and make more money. Now, when we don't sell the stock and make more money, it becomes an expense to us. We have lost it. Right. Let's go back to our scenario now. Now you understand what is stock deficit. Right. Now, there is a customer who returned this value of merchandise. Let's now look at what initially happened when we sell this merchandise. Now we're gonna also take into consideration the maintenance of consistent markup of 60% on all goods. What is markup? Markup, it means that on top of cost, we add 60% so that we get profit. Right. Let's look at what have initially happened when we buy, when we sell the stock. This is our inventory. And then this side is debit, this side is your credit. Right. When you buy stock, it's going to increase on the debit side because inventory is an asset account. Is when you buy. When you sell, that asset now is being reduced because you no longer have that inventory. So it decreases on the credit side. Let me say it increases on the debit side and it decreases on the credit side because it's an asset. Right. Now when you sell, you're no longer going to have that stock. It means that that asset is now being reduced. It's going to come this side. Right. And then now let's put the correct accounts and the amount. Let's say for argument's sake, this is the only stock that you have. From what you are told, the value of the merchandise returned is how much? 31,200. 31,200. Right. So this 31,200, when we want to know the cost of this 31,200, because this is sales, it is from the debtors account. You are going to multiply this by 100 divided by 160. The reason being, you want to get the 100, which is the cost, inside the 160, which is the selling price. Remember, cost plus markup is equal to selling price. Now, your cost is 100%, your markup is 60%, your selling price is 160. Right. So if you are looking for this inside this, you are looking for this and this is what we are given. So it means that what you are looking for on top, what you have underneath. Also the other way around. If you were given cost of sales and you need sales, you will say 160, what you are looking for, divide by what you are given. If you are given the profit, we use markup, and you are looking for sales, what you are looking for on top, divide by what you have. So at this point, we are given the sales, which is represented by 160. And we are looking for the cost, which is 100. Right. That is why we have to do this. We say 100, what we are looking for, divided by what we have. And this is the what we have. Right. And then you get your cost to be, I'm pressing my calculator, 31,200 multiplied by 100 divided by 160. You get 19,500. 19,500. So this is the cost of the inventory that the customer have returned. So it means that before we sell, we had that inventory in our books. This is the value of inventory in our books. And then we sold the inventory. When we sell the inventory, what happened? It goes, now it changed the name now. Let me say here is the balance brought down, just for argument's sake. Alright, now it goes to cost of sales, 19,500. Right, let's go to the cost of sales account. This is the cost of sales. Remember, when you debit on the other side, you're going to credit on the other side. Here we have credited. Now we're going to debit the cost of sales with the 19,500. Where is it coming from? From inventory account. Right. Why is it coming here? Because we have made a sale. And where do we recognize our sale? We recognize our sale on the account called trading account. Okay, this is just a temporary account that we create when we want to do sales, right? When we want to sell, to determine the profit or loss. Right, now it goes to the trading account, 19,500. Cost of sales, 19,500. And then how much did we sell it for? We sold it for 31,200. Then we have our sales here, 31,200. Then if we have our sales here, which is 31,200, it means that we're gonna have this amount on the debit side of the sales account. Whenever there is a debit, there is a credit. Sales account. This is from the trading account, 31,200. Okay, and then now we close off this account. We close it off, and this is the bigger side. So we are going to have 31,200 here, 31,200 here, and then what is the balancing figure here? The balancing figure is going to be 31,200 minus 19,500. It's 11,700, and it goes to your profit and loss account. Then we can somehow create a profit or loss account. This is the account that determines your profit at the end of the year, where you put in all your income and your expenses. Right, then the 11,700, it's going to come here. 11,700 is from the trading account. Right, this account is more like your income statement. Then we're gonna put all other income, and then other expenses, and then underneath they will get your thingy, your profit and your profit or your loss. Right, but that is not where the focus is for now. Right, now this is our sales. So from these sales, how was this sales realized? It was realized through a debtor. We're gonna have debtors control here, 31,200. Who is that debtor? Is the Mfrede. Remember, Mfrede has returned this value of merchandise, but now we are starting on what happened when we sell, so that when you return, you know the impact of the return and how does it affect your trading stock. We were here, ne? Now remember, I said wherever there is a credit, there's going to be a debit. Now let's go to our debtors control account. Debtors control, debit, credit. This is an asset account. It increases on the debit side, it decreases on the credit side. Right, sales, how much was it? 31,200. This is what initially happened when we sell the asset. When we sell inventory to, inventory is asset though. It's just that it's current asset. So yeah, when I say sale of asset, now it sounds like now we're talking about disposal. Okay, fine. Right, now this person said, no man, I want to return the merchandise. So when we return the merchandise, it means that this debtor is no longer owing us. So if they no longer owe us, it means that we're going to credit. We are reducing the debt. Okay, Now, when we reduce the debt, we are going to reverse everything that happened. So, we are going to allow this debtor to return these goods. So, we are going to have sales return here. But to make it much more simple so that you understand the impact of this in income statement, let me just put sales here, because we are reversing what we did here. Then we are reversing it. Then we go back to sales. This is our sales. It means that I said sales is an income account, meaning that it decrease on the debit side and increase on the credit side. So here it have increased when we raise the data. Now the data has returned that merchandise. It means that our sales now is going to decrease. Let's just say data's control here for argument's sake, for you to understand the concept for now. 31,200. So immediately when we say sales has decreased by 31,200, it means that this is going to affect your income statement on your sales. That 31,200 is included here. It means that now when you have your adjustment on your income statement for sales, you are going to have your 12,171,200 minus 31,200. When you go do your income statement, you are going to have this adjustment. Right. This is also going to affect your cost of sales. Remember, the examiner didn't give you the cost of sales here, but with the information you got that they maintain 60%, you can get your cost of sales based on this amount, 12,171,200. 12,171,200 multiplied by, you need your 100% inside the 160. And then how much do you get? 12,171,200 multiplied by 100 divided by 160. You get your 7,607,000. So literally this is the amount that is supposed to be where there is a question mark. Is the amount that is sitting here. 7,607,000. So meaning that this amount also have to be adjusted. Your cost of sale now is going to be your 7,607,000 minus what was the cost of this merchandise that has been returned. We have calculated it. We have calculated it here to be 19,500. Now I'm beating too many birds in one stone. We have calculated it to be 200 multiplied by 100 over 160, 19,500. then you're going to get your new cost of sale. Or if you don't want to do it this long way, what you're going to do on your cost of sales, you're just going to say, okay, now I have my new sales from this calculation. You have your new sales from this calculation. You just take that amount. What is your new sales now? 12,171,200 minus 31,200. Your new sales now is, let me just write it here, it's fine, 12,140,000 is your new sales now. So if this is your new sales now, you can simply multiply this by 100 over 160. And you're going to get the same amount that you're going to get when you do this. 140,000 multiplied by 100 divided by 160. You're going to get your 758,750. Let's see if we say this minus this, we're going to get the same amount. You can do it on your calculator as well. 7607,000 minus 19,500. I got the same amount on my side. Just that you can't see my calculator on your side. I'm not sharing my calculator because the screen, I just want to have enough space on the screen. Right. Let's go down. Remember, the main aim of doing this is to get to our trading stock deficit. Right. Where were we? We were here. We have reversed our debtors on the sales. Hence, I went up there and say we are going to minus the sales figure when we do our income statement. So you see, this is affecting a lot of accounts. If you were also doing your trading stock, you were doing your what you call your statement of your why am I forgetting this statement now? Statement of financial position. I'm sorry for that. If you're also doing your statement of financial position, your balance sheet, you are also going to have an adjustment on your inventory. Right. Now, let's go to our inventory. Now that we have reversed this. Now, let's go to our inventory. This is our trading. This is our cost of sales. Trading account, sales, profit and loss, debtors control. I didn't have inventory account here. Oh, okay, here it is. Right. Now, it means that after we have done this sale, we have a zero balance. But now the customer have returned to the value of 19,500. It means that our cost of sale is going to be reversed as well. Because remember, our cost of sale, this is what initially happened when we sell. Now it's going to be reversed. When it is being reversed, it means that this is going back, this is going back. So if this is going back, it is going to create a debit on our inventory. We are going to have 19,500 here. Let's just say return for argument's sake. So now in the value of our stock, we have 19,500 now, of which initially we didn't have anything. We had zero. Remember, here it is. We had zero. We didn't have anything. And this is the zero I'm talking about that happened when we initially sell But now we have returned, the customer have returned merchandise. Now we have 19,500. So how does this affect our trading stock deficit? Our trading stock deficit has been disclosed as 22,150 before counting the stock that came back. It means that when we go to the storeroom and count, we said, okay, we are in short of this value of stock. Whereas there is some of the stock that have been returned and put in the shelf. Remember, when we put in the shelf, we put in the front, in the store. If we're talking about ShopRite, we're going to put them in the shelf at ShopRite. So the person who is doing stock count is going to the storeroom and count. Right. They find out that no, we lost stock to the value of 22,150. Now we realize, no man, Meneer Frede returned stock. So from what we are saying we have lost, this is not actually what we have lost, because there is some of stock which is in there. So we have to minus the 19,500 that has been returned. And then now we have the correct loss now. 22,150 minus 19,500. So the actual loss is 2,650. This is what you are going to disclose as your trading stock deficit in your statement of comprehensive income. I hope I make sense. If I don't make sense, you want to do further follow-up, you know where to find me. 071 121 4445. Just send us a WhatsApp and then we'll see how best we can assist you.